All right. Filing status. As we mentioned earlier, there are 5 different statuses, filing statuses. And so you got married filing jointly, married filing separately, qualifying widow or widower, otherwise known as a surviving spouse, single, and head of household. So married filing jointly. As long as you are married on the last day of a tax year, you are considered married. If one spouse dies, the surviving spouse is considered to be married to the descendant for the whole year. The one exception to that is if the surviving spouse remarries before the end of the year. So we'll talk about surviving spouse. Note that if you are married and you file jointly, any tax owed from the tax filing, regardless of who made the money and on whose income the tax is owed, this liability becomes joint and several, meaning both taxpayers, both spouses, are liable for the tax. And so joint and several means the IRS essentially can go after one party, one taxpayer, the other taxpayer, or both. When does this usually come into play? Usually where parties are no longer married or living apart. You cannot claim, let's say a husband and wife file a tax return for 2014, and the IRS comes back and audits the tax return and says the husband didn't disclose all his income, and they assess an additional tax liability. And so the whole assessment is attributed to money that the husband earned. Well, barring some sort of innocent spouse relief, the IRS can go after both the husband and the wife, even though she didn't earn it. She didn't earn the income that's related to the additional tax liability. Married filing separately. Taxpayers are married, but they file separate returns. In normal situations of a healthy marital relationship, it's not advisable to file separately, because the way, if you look at the plateaus of progressivity of the tax rates for each, for married filing separately, the tax rates increase at a lower threshold of income. Again, look at your tax tables and you'll understand what I'm talking about. But it might be beneficial for a spouse to file a separate return for non-tax purposes. First of all, you don't have the joint and several liability problem. I see this a lot where, let's say for instance, 2 parties are going to get married. or just got married, and one of the spouses has tax liability from a prior year, and the IRS is pursuing collection action on that tax liability. You, the non-owing spouse, wouldn't want to file a tax return with this person, probably, because let's say you might get a refund. That refund is just going to be eaten up to pay the other spouse's old tax liability. So anyway, and plus, there's the trust issue. Well, you know, if you had tax problems back then, who's to say you won't now? It's a heck of a way to start out a marriage, though. A qualifying widow or widower is another type of status similar to married filing jointly. And so if you qualify as a widow or widower, this filing status is available for the year of the spouse's death and 2 years after the spouse's death. Now, the surviving spouse does not qualify if they remarried during this 2-year period. Note that a surviving spouse must maintain a household for a dependent child, not a dependent relative, dependent child. Some other things, they have to remain unmarried during, obviously, the year of death, as well as the subsequent 2 years to qualify for this. And if they do marry within that 2-year period, they just, whatever year they get married in, the benefit stops of this filing status. Note that the qualifying widow or widower must pay the cost of maintaining a household where the dependent child lives, and this dependent child must live there the whole year. Now note, child refers to the qualifying widow or widower's child or stepchild. So the deceased's child, if you will. But not a foster child. Single. You are single and must file as such if you are unmarried at the end of the year. So it just takes 1 day of being unmarried in a tax year at the end of the year, December 31st, in order to qualify as single. Next is head of household. You are head of household if you're unmarried or considered unmarried at the end of the year. And so when we get to considered unmarried, we'll talk about abandoned spouses On top of being unmarried or considered unmarried at the end of the year, you can't be a qualifying widow or widower. And again, you have to meet all these requirements. You have to pay more than half the cost of keeping up a home during the year. And in that home must live a qualifying person for more than half of the year. Now, the exception to that living in the home for more than half of the year is if the taxpayer's parents are involved and the taxpayer pays more than half the costs of keeping up a separate home for the parents. So note that if you're parents, you don't have to live with the taxpayer, and the taxpayer can still receive this head of household status. So again, qualifying person could be qualifying child, could be a qualifying relative who is the taxpayer's mother or father. Again, go back and look at the qualifications for qualifying child, qualifying relative. But if it's a qualifying relative, they must be the taxpayer's mother or father. If you have if you have a qualifying relative who is not the taxpayer's parent, they've got to live with the taxpayer for more than half the year, qualifies the taxpayer's dependent. See qualifying dependent requirements. And must be related to the taxpayer through a qualified family relationship. All right, so again, continuing on with this head of household, a married individual is considered unmarried, hence an abandoned spouse, if the individual is married at the end of a particular tax year, does not file a joint return with the other spouse, pays more than half the cost of maintaining a household that serves as the principal abode for a qualifying child for more than half the year. And the key to this mainly is this. They lived apart, the taxpayer did, from the other spouse for the last 6 months of the year. And that doesn't include temporary absences. So they've got to be gone, the other spouse, for the whole last 6 months of the year. Okay? They can't keep coming back for, weekends and stuff like that. Because if they do, they break the cycle of the last 6 months. Again, look at this example. So they're just taking the original example, Rodney passes away and Anita did not remarry, maintained a household for Braxton and Tara, her dependent children. Under these circumstances, what would Anita's filing status be? Well, she'd be qualifying widow or widower. And what would happen is, in the year of Rodney's death, they would file married filing jointly in that year. The number of exemptions in the year of Rodney's death would be 4. 1 for Rodney, 1 for Anita, 1 for Braxton, 1 for Tara. And so you get 4. Now, in subsequent years, assuming she doesn't remarry, in the subsequent 2 years, in those years, she's going to file married filing jointly, but what she's going to get is 3 exemptions. So in subsequent years of the date of death, you can't take an exemption for the deceased. Here we have an example. Assume Rodney and Anita divorced last year. During the current year, Braxton lives with Anita, and Anita pays all the costs of maintaining household for herself and Braxton. Under these circumstances, what is Anita's filing status for the current year? Well, she would be a head of household. Next example. Assume Sean, Rodney's brother, lived with the Halls, but Sean paid more than half the cost of maintaining a separate apartment that is the principal residence of his mother, whose gross income is $1,500. Because Sean provided more than half of Sharon's support during the year, because Sharon's gross income was only $1,500, meaning less than $4,000, she qualifies as Sean's dependent as a qualifying relative. In these circumstances, what is Sean's filing status? Head of household. Sean paid more than half the cost of maintaining a separate household that is the principal residence of abode, or principal place of abode, for his mother, and his mother qualifies as a dependent. The end.